Calling all rental property owners, let's talk about declaring your rental income as part of your personal income tax return. So whether you're making a profit or a loss, you need to declare your income. If you're making a loss, you're likely to get a little bit something back, as the loss will reduce your tax liability. And if you're making a profit, unfortunately, you will have to give to Caesar what is due to Caesar. But if you choose not to, just know that what you're doing is tax evasion, and one day you might have to bear the consequences of it. So the first thing you need to do is create what's called a rental income schedule. I usually do mine on an Excel document. This is basically where I list all of my expenses pertaining to the property, and then I get all of the amounts for every expense that is deductible, and then I put it on my spreadsheet. So here are the types of expenses that you can deduct. The first is your bond interest. Now, this is not to be confused with your actual bond payment. So this is just the interest portion of it that the bank is charging you. Then you have your municipal rates, then you have your levies, then you have insurance, then you have maintenance and repairs, then you have agent fees, and then you also have services. So that would be things like gardening and things like your alarm systems that would also be deducted. So this is what my rental expense schedule looks like. So this is meant to help you to be able to calculate your totals of everything that is deductible. And then also it will help if you get picked for audit, then you can actually show those calculations. And the important thing as well is to also keep all of the supporting documents so that you can prove where the numbers are coming from. So with mine, the applicable expenses for this year were my bond, my levies, my rates, and then I had 2 instances of maintenance where I had to repair my geyser. So altogether, my expenses were about 105,000. Now, these are the deductible expenses. So as part of my schedule as well, I chose to also include the actual rental amount that I received. So I did break it down month by month as well, similar to how I did it with the expenses. And my total income for the tax year amounted to 51,600 Rand. Now, how you use these amounts on your tax return also depends on whether you're living on the property or whether the property is fully rented out. I used to rent out my apartment fully, but for this tax year, I actually was living in the apartment. So how I declare my expenses is also going to be different because of that. So if you live on the property, you have to apportion the expenses based on the amount of space rented versus the amount of space that you are using. For example, if your property is 100 square meters and you are living on 40 square meters and you're renting out 60 square meters of your property, that means that 40% of those expenses are actually yours and you cannot actually deduct your own expenses. That means then you can only deduct 60% of the expenses since only 60% of the property is rented out. In my situation for this year, I had to split my expenses by 50%. So 50% would be mine and 50% would be the rented part of it. So that means I've cut that 105,000 in half. So everything that I have declared needs to go onto the e-filing as half the amount because of this. Now let's go onto SARS e-filing and let me show you where you would then put these amounts. When you open your tax return, you have your form wizard. This is where you actually select things that are applicable to you that will then inform how the form looks like after the wizard. Basically, it generates the different things that you need to populate based on your answers on the form wizard. So this applies as well to rental income. There's a question on the form wizard that you need to say yes to for it to be part of your tax return. This is the question. So you would then select yes here, and then you would need to also populate the number of properties that you have that you are renting that would need to be part of this exercise. Once you're done with that, then under income and also under local rental income is where you will find the actual questions that you need to answer pertaining to your rental property. The first part is you populating how much you made from your rental income. Okay. Then after that, you would then populate all of the expense items that apply to you. And this is what the form looks like. The system will then calculate whether you made a profit or you made a loss. Below the calculated results, there will be a question, if you made a loss, whether you want that loss to be ring-fenced or not. Now, this part, I click no. Now, what exactly is ring fencing? So what this means is that you can actually choose that if you have made a loss, instead of that reducing your current tax liability for your personal income, they can actually put that aside so that it's actually used in future and offset the tax against the profit you're going to make later. To be able to click yes here, you need to meet specific criteria, which I will not be covering in this video, but some of it has to do with your income, your tax bracket, and it also has to do with how many years you've made a loss on the property. So it's things like that. And the burden is also on you to prove that you're actually doing this as a business. The form will also ask you whether you're in a partnership or not. So there you will also answer based on whether you are partnering with somebody on this property or not. I hope you see how easy it is to declare your rental income on your tax return, but let me know if you have any questions in the comments.